So thank you very much for having me here, and thanks for the invitation to this wonderful place. I think I'm now in competition with the sun and the sea outside, but you can't have it all. In fact, it's my first time in Poland, but I'm a big fan, I must say, in particular of Robert Lewandowski. He was a bit unlucky, unfortunately, in the semi-final against Real, but I think he kept it all for the World Cup, so you can really look forward to this. Family income pension, the relatively broad topic of this introductory speech is really close to our heart at Zurich. And we think this is more urgent than ever for basically two reasons. If you think of government-funded benefits, obviously the governments are coming under more and more pressure as government debt is growing. That's the first reason. And the second reason, when you talk about corporate pension schemes, then it was mentioned already a number of times that the nature of work is changing. There is more and more informal work. People are self-employed, work part-time, or in sort of new employment schemes, and usually these people are benefiting less from both the government benefits as well as corporate pension schemes. So at Zurich we have hence worked together and entered into a partnership with the Smith School of Enterprise and the Environment at Oxford University. They are behavioral economists, so looking into why people do what they do and don't do what they don't do. So without any further ado, let's dive right into it. I should mention I have made sure that you will all have access to the presentation afterwards, so if I skip through a couple of slides, you can read it all up later on. Let me just frame sort of the topic very broadly. Family income pension, as I mentioned it's a rather broad topic. So this picture shows a typical sort of life cycle approach that I'm sure you're all familiar with. And what it shows is that we really talk about three things, basically. We talk about the coverage against premature death and disability, which is the first topic, and that's usually relevant until people retire, which we haven't really depicted on the slide. You look at retirement savings or the accumulation phase, and you look at the basically pension income or the decumulation phase. So the focus of my speech actually is on death and disability, but let me give you some sort of hints on what really is the problem in these three segments, death and disability. So what we see globally is significant income protection gaps, as we call it. And again, looking into people's behaviors, why do these income protection gaps exist? So why are people not having as much coverage against death and disability as they should have? There's a whole number of reasons, starting from the lack of awareness. Then it's an underestimation of the subjective risk. Basically what that means in one sentence is a, oh, this won't happen to me sort of attitude. Then what was also mentioned already in the morning is the overestimated cost. So basically people think insurance against premature death or disability is very, very expensive, and usually there are products out there which aren't as expensive. And finally, there is reliance on others. So if you ask people sort of what happens to your family if you die tomorrow, or what happens sort of, what kind of income would you have if you couldn't go to work any longer, they basically say, well, either my family will take care of it or the governments will sort of look after me. A couple of numbers on Poland, and I'll provide more detail on this. So 17% of the population younger than 65 years are experiencing some form of disability in this country. And 12% of the working age population are expected to die before they reach retirement. So it's not a problem of the minority, it is a significant problem. Just very briefly on the other two areas, retirement savings. Why aren't people saving? I already mentioned awareness. But one additional thing here is the high time value of money. In other words, the zloty today has a much, much higher value for people than the zloty tomorrow, or in other words, you know, having fun today is much nicer than waiting for some potential fun later on in life. To get numbers from Poland, I quoted our colleagues from Aviva and their really good work on the retirement savings gap. So the annual pension savings gap in Poland already today amounts to 65 billion euros or 14% of GWP. And then we have the retirement income gap, which basically means what happens to people when they retire and don't go to work any longer. Well, the first problem here is problem number 2. They haven't saved enough. But even if they have saved enough, the next problem is many people are not good in handling large amounts of money. In other words, if you give people a whole lot of money, chances are they'll spend it rather than basically decumulating it over their remaining lifetime. And an additional problem here is that people are underestimating and don't understand the term of longevity risk, as we call it in the insurance industry, because to many people, sort of getting old is not a risk, it's something they are partially looking forward to. And this problem gets amplified by the life expectancy, which has increased in basically across the world, and in this country over the last 30 years, it has increased by 7 years. So diving a little bit into income protection gaps, what do we call an income protection gap? To us, that is a reduction in household income due to basically premature death or disability of the main breadwinner, and then taking all replacement income into account. Now, just some more color. I already mentioned it up front. Why do we think this problem is increasing and it has some urgency attached to it? So the first 2 boxes are on the demand side, and the bottom ones are more on the supply side. So disability rates are usually underestimated, as well as the relevance of premature death. And they are high, and they are also growing, and longevity is increasing. On the bottom side, we have the supply side in terms of replacement income. I already mentioned the sort of workforce in transition or the changing work environment. So basically a classical corporate pension scheme where you have it and when you have it is usually, let's say, working the best at larger corporations, full-time employees, and this is unfortunately the type of employment that you see in decline or under pressure. And also mentioned already number 4, the pressure on government finances. I'll give you more details on the numbers, but by and large, I'd say looking at Poland versus other markets around or the EU average, Poland is sort of doing okay, yeah, sometimes a little bit below average in terms of disability rates, which is obviously good, sometimes above average. And let me put your attention on the box number 4, pressure on national budgets. So Poland has spent relatively little on social expenditures relative to GDP compared to other countries in sort of Western Europe, but has been catching up. And again, you're already spending 20% on social affairs, 20% of GDP. That's not good or bad, but obviously it cannot keep on increasing at the same page forever. So premature death, this is the premature death rate. So basically it means the share of people at the working age population, working age defined here as people aged 15 to 60 years that are expected to die before they reach retirement. As I mentioned, it is relatively high in Poland at 12%, but sort of depending on how you look at it, it's a bit higher than the US, but much higher than, say, Switzerland or Germany, who are on the bottom end. Now you may wonder, what are people dying of? And basically, people are dying of the same causes pretty much everywhere in the world. So the key diseases are heart diseases, cerebrovascular, which is sort of brain diseases like stroke, and lung cancer. So again, it's the same diseases everywhere. And apologies for that sort of odd selection of countries, but that's what what was available easily. But the point here is that you have some, notably, I would say, higher risks in Poland. For instance, for heart disease, it's 3.5 times the level of France, and for lung cancer, it's 2 times the level of Sweden. I don't know, but I guess people are just smoking more, for instance. Yeah. What happens to a household after the death of the main breadwinner? Well, the consequences are severe, which is not a surprise, but as I mentioned earlier, people out there are not aware of it. So just look at the example from the UK, where 20% of the households fall into poverty after an unexpected adult death, which means they weren't insured appropriately. The picture for Poland in particular is a bit better on disability. So here you are below the European average. But again, the numbers are strikingly high. Look at this, 24.2% of people in Poland versus 27% in the EU experience some form of disability. And I should be fair here and position those numbers with you. So this is survey-based, because if you look at numbers based on, let's say, benefits people get from either the government or an employer scheme, then you're always referring to the number of people that are entitled to any benefits, first of all, and secondly, sort of the legal restrictions with respect to access. So this is based on a survey, which obviously has the big downside that everyone maybe defines it a little bit differently, but the question asked was, have you been unable to perform the activities of daily life over the last 6 months? Over at least the last 6 months, and again, 24% of the population said yes, so basically, you could argue they cannot go to work and perform at their full capacity. Now, the same question as we had for premature death, what is driving sort of these disabilities? And I'd say that the surprising message here, I know it's a crowded chart, so bear with me. The surprising message is, it's not all these horrible events that people have in their minds. It's not car accidents. It's not cancer. It is back pain. The #1 cause is back pain. How boring is that? But we all sit in our offices for 2 long hours. We don't exercise enough, and that's driving back pain. And one day, people cannot go to work any longer. Now, the other interesting component here is, if you look at this by age, and again, it's a busy slide, so bear with me. In the circle, what you see there is mental diseases. So that slide says that for people aged 20 to 45 years old, mental diseases are the #1 driver of disability in Poland. Okay? Once people get older, sort of these more purple sort of bars are basically back pain, so musculoskeletal diseases, and other things. So mental diseases are a big problem. And in fact, not only in Poland, but in the world. So mental diseases of younger people drive up disability rates. We spoke about aging and retirement. Now, the not surprising fact is that disability rates increase with age. So the older you get, the higher the chances that sort of you aren't perfectly healthy any longer. That's not a surprise to anyone. But what is surprising is the level. So again, across Europe, more than half of the people aged 65 years and older experience some form of disability. Now, guess what that means if you are increasing retirement age? Yeah? People may need to go to work to earn their full sort of pension benefit, but they cannot. They cannot work at their full capacity. And longevity, as I already mentioned, is increasing and has increased globally as well as in this country. In fact, and I'm sure there is some actuaries among us, and they may forgive me, but in the past, every forecast on how long people will live has been wrong. It has been underestimated. Look at this, longevity in Poland has increased, so life expectancy has increased by 7 years over the last 30 years, or by 2.5 years roughly since 2004. Now the good news is you're catching up with the US, you're catching up with Switzerland. So finally, I put in this slide where I'm sure all of you know much more about it than I do in terms of the changing workforce. To be fair, it doesn't really come through in the numbers, where basically the dark blue bars at the bottom show you the number of employees, and then you have the self-employed people, family workers, and so on above. You can also read it the other way around, whether or not self-employment and other forms of employment are increasing, but with a proper sort of corporate pension scheme with employee benefits, you could catch about 43% of the population and address some of the issues if those programs were properly designed. I skipped that one, as I see the clock ticking down. Coming towards our study on behavior. So if all this evidence, I hope you agree, if all this evidence is so striking, why are people not buying insurance? And we did the study a while ago, surveying 13,500 people in 12 countries. I must admit, unfortunately, Poland was not among those countries. But let me share some of the findings on a qualitative level. Good news for all of us as insurers, okay? There is significant untapped demand, because if you talk to people and make them aware of the topic, 52% in our survey of the people who didn't have insurance said, oh, that sounds like a good idea, yeah, I should probably buy it. So there is a high interest in principle in our products. Then I think a couple of findings are less positive. So the middle income earners are at most risk for two reasons, because if you earn really a low income, chances are you fall into some sort of government scheme and are covered by that. If you have a really high income and are very wealthy, you're basically covered by your savings or your wealth. Middle income earners are at most risk. And unfortunately, we saw the disability rates for elderly people. Older workers are more likely to lack protection, but they are also more likely to need it. Again, primary wage earners, which I already mentioned, and full-time workers are usually much better covered compared to part-time workers and people working, sort of earning a secondary income in a household. So I skipped the slides with the numbers, as Poland isn't on there anyway. And as I mentioned, I'm happy you'll have access to the presentation. So what can be done about it? And let me jump right away onto a couple of examples. Here we put two examples. They are mainly around corporate pension schemes. One is Australia and the superannuation funds. So I don't know how familiar you are with it, and I think there'll be some time in our panel discussion as well to talk about it. But the thing about the superannuation, that's basically a pension fund where employers are mandated by the Australian government to make contributions on behalf of their employees. Okay, so that is the savings part. The intriguing thing about Australia is that biometric risks are covered as well. So disability, as we've seen before, is covered in these schemes, and it's mandatory to be covered. It's covered sort of by law on a relatively low level, but employees can make extra contributions to get a higher protection against disability. And here I've put sort of even more examples across the board. You see the superannuation schemes in Australia. Workplace pensions and auto-enrollment, also known under the label NEST, was mentioned by Madam Minister. In the morning, the UK have had sort of their workplace pension scheme for a while, but the auto-enrollment, which basically again means every employee gets access to it, is a new feature. My time is up, 10 more seconds. You could also mention a discussion in your neighboring country, Germany, on the Nahles-Rente or the Betriebsrentenänderungsgesetz, which is going into a similar direction coming from Switzerland. We've seen sort of a scheme all more or less going into the same direction as Australia for roughly 30 years. PEP, which I don't know whether you're familiar with the conversations, is a different thing. That is a third pillar, so it's an individual savings product. So, as I said, you get the presentation. I know it was rather quick and dirty. You get the presentation from the PIU, and you can visit our websites. It's all free of charge. Just click it, like it, share it, and link it. Thanks.